And so my name is Attorney Judith Luce Montgomery with the Atlanta Family and Immigration Law Firm. And my special guest today is my financial planner, Dane Cooper. Dane Cooper has actually been my financial advisor. I think we're going on 8 years now, Dane.
Yeah, it's been a while.
And so we have several policies, I think through Capstone. Is that correct? Capstone Financial?
The name of my firm that I work through is Capstone Financial, yes.
Fantastic. And so, Dane, if you can share a little bit about yourself, introduce yourself, and then we're going to get to your top 10 answers today. How does that sound?
Okay, sounds great. Sounds great. My name is Dane Cooper. I am a financial planner with a financial planning firm called Capstone Financial. It is a firm maybe similar to a small law firm where many professionals work, and we have our own practice and help our clients. The help we deliver to our clients can look very different just depending on what who the client is and what they need for themselves and their families in regards to financial planning and financial success in general. And that's a broad area. I am originally from Athens, Georgia, and went to the University of Georgia, and straight out of school started my career in financial services in the insurance industry with Liberty Mutual for 6 years, pardon me. And then in 2010, I started with Capstone Financial and had my practice there ever since. These days, my clients are in all different types of professions, all different types of family dynamics, and it has been a very rewarding profession being able to help solve people's problems. Like so many of us who are professionals out there, it's our job to help solve problems that people run into. I'm able to do that from a financial perspective and give people guidance and a little bit of foresight on mistakes to avoid instead of having to learn from their own mistakes.
All right. Sounds good. Dane is always giving me advice on things I should not be doing. So I thought that I would bring him on today because obviously when COVID hit, like many of you guys, I panicked. Obviously. And I reached out to Dane and I said, Dane, what can I do? How much can I get? Can I take all the money I got, even if it's $2.50? Can I get it and get more liquid as quickly as possible? And I think that was the concern for a lot of people. People were trying to get liquid and was trying to figure out what they should do. And so, Dane, a lot of folks sent in questions. And I wanted to share those questions with you and see what your thoughts on what they can do moving forward. I think these questions are very, very valid. One of the questions that we received, and I asked you this, but I said I wanted you to answer it on live and not answer it with me. But specifically, folks were talking about if you have a retirement plan, a 401k, a 403b, a Roth IRA, etc., apparently under the new CARES Act that you can withdraw up to $100,000 without penalty for 3 years, or just pay the 10% tax on whatever you take out. What is your advice for people when they hear something like that and says, I'm going to take all of my money out?
Pump the brakes. Panic is definitely involved in situations like these. People have 3 basic areas to go for money to help pay bills. They have cash savings, and then they have retirement savings, which are usually invested, and they have non-retirement investment savings as well. So the 401ks, the 403bs of the world fall under the retirement savings. It can be very dangerous to pull money out of there just because, that money is not supposed to be for today. It's supposed to be for tomorrow. But if they had to break glass in case of emergency and get money out of their retirement plan, they can, with their employer, they can do so. Typically what's involved is you'll pay a 10% penalty for early withdrawal before the age of 59. Mm-hmm. and the income taxes in addition to that penalty. So what the government is doing with the CARES Act is that for the next 3 years, if you're taking the withdrawal, they're going to waive that 10% penalty. You're still going to have to pay the taxes because you haven't paid taxes on that income yet, but they are waiving the penalty. So that is a newer option that's available. One that is also available through 401ks and 403bs. It just depends on your individual employer plan. Is that there is also a 401k loan that's available. The reason I would probably suggest people consider the loan first instead of with the withdrawal is because there's that obligation to pay the money back into their account. It's a nice obligation to have because you want, that money to be there for retirement. So if you take, say, $10,000 out, you can set up the loan repayment schedule. Hopefully, 6, 7, 8 months from now, your situation changes and you're earning a steady income again, and then you can begin to repay that loan back into your plan and have saved your retirement.
Okay, for people that are just joining on Instagram and Facebook, thank you so much, guys. I appreciate you joining us today. We have my financial planner, Dane Cooper, Capstone Financial, and he is answering questions, investments in the midst of the pandemic. So please, if you have any questions, type them up and I'll be sure that he answers them. And also thank you for the folks joining on Facebook as well. We appreciate it. So Dane, the question that we have for a lot of folks that one of the questions is, I've been furloughed or laid off and I need to be more liquid to take care of my family. So your answer to that kind of goes in line with what you just stated. So you're saying try the loan first? Is that what you're saying?
Before with an actual withdrawal from the 401k, that would be my ideal suggestion, but everybody's situation is different. Now, if you have been laid off and you're no longer with the company, you may not be eligible for the loan any longer. So that is something to check. If you're furloughed, maybe you do still have that option because you will be working again. But regardless of all of that, cash is the best place to start. A very basic recommendation I make for my clients, or specifically for people who are maybe they're not quite ready to start financial planning, is to get 3 to 6 months worth of living expense cash saved in the bank. So you got to, you want to try to figure out how expensive life is for you on a monthly basis. If you are a one income household, you multiply that by 6 and make that your target for a savings account. If you're a two income household, you can lean towards 3 months worth of cash savings and put it in a savings account with a bank that pays a good interest rate. Okay.
So Dane, let me ask you a question. I guess this is more so for me, but growing up, we had, a CD and also a savings that was garnering some sort of interest at really high amounts, a lot higher than what I'm seeing today. Would you agree with that?
Yes. Interest rates have been on a decline for the last 30 to 40 years.
Okay. And so when you say try to find an account where there's interest bearing, do you have anybody in particular or you say do your research? What are your thoughts?
But the answer is both. So I love online banks for savings accounts. Your traditional brick and mortar banks, Wells Fargo, Bank of America, SunTrust Bank, their interest rates on savings accounts pay next to nothing.
Correct.
But online banks are very effective with savings accounts relative to what these brick and mortar banks are paying. Great example of reputable online banks are Ally Bank. American Express has a great savings account platform. Marcus by Goldman Sachs has a great online savings account platform. Barclays Bank has a great online savings. Capital One. So these are all very reputable banks. It is very easy to go online, open an account. It probably takes 5 minutes to just type in your name, address, social, driver's license number, and click apply for a savings account. Mm-hmm. And current interest rates are about 1.25% to 1.5%, which is not amazing. This time last year, it was about 2.5%, but the Fed keeps adjusting interest rates down. So the banks are having to parallel that, unfortunately. But online banks are a great place to go for savings accounts. It is very easy to transfer money back and forth to your Wells Fargo if that's where your checking account is and you don't want to lose or change that checking account. It takes 1 to 2 business days to transfer money electronically, and it is free to do so from these online banks.
All right. Thanks, Dan. I needed that because that's what I was going to say. I was going to say the banks that I have, those banks don't seem to be yielding very much when it comes to interest. So it's good to have a list of some potential banks that we can look at. So now, are we in an area or a time where there is no penalty to pull from life insurance or 401k? Would you say that there are no penalties at this time with what's going on?
Technically, the only penalty was that 10% on the 401k or retirement plan. That being said, each is going to come with its, opportunities and pitfalls. If you pull from a retirement account, you're still going to have to pay the income taxes. Different types of life insurance have different opportunities to pull money out of a permanent life insurance policy. It depends on the type of the policy. So, and it takes longer than pulling the money, if it was just in a cash checking or savings account at a bank. It usually takes 1 week to 2 weeks to get money out of a life insurance policy or a retirement account. So there's kind of a time factor as well.
Okay. So the market's unstable. I've already lost some money, right, from my 401k and stocks. And so how can my current financial disposition improve? What are your thoughts on that?
My best answer is patience. I know that's not what a lot of people want to hear. Luckily, we have a little bit of experience in this area because there was a major downturn in 2001. There was a major downturn in 2008, and now there's another major downturn here in 2020. The markets have come back very strong in between each of these calamities, each one of them being different. So for the younger investors like ourselves, a long-term investment strategy it's built for higher risk, higher return, and right now, we're dealing with that higher risk piece of the puzzle. Mm-hmm. So that would be my first suggestion to people who have a time horizon of longer than 5 years. If they have a time horizon to needing that money for retirement, if it's a retirement account, and if less than 5 years, then they should consider making the investment profile more conservative if they are in an aggressive profile.
Okay. And so when you say, so at this point in time, so what are you doing with your clients who have a more diversified portfolio? Are you saying them to move that money to cash? What are you telling them at this time?
Well, it is to be patient because the markets do come back after these types of things. If they don't need the money, then I'm telling them to hold tight. The emotional side and the practical side of dealing with times like these and investments are polar opposites. When we see the market going down, we want to grab our money and hold it tight. But that's not the best thing to do because technically you're selling low. And in the investment world, you want to avoid selling low. So if you don't need the money, my advice would be to sit tight and ride out the storm because the rain clouds will go away and the sun will come back out, and we'll get good returns again when the market can recover. It's just going to take some time.
I have a question on Instagram from the King Plan. How does he feel about penny stock, especially at this time?
Penny stocks are, that name for a reason. There's not a lot of, value there. It's certainly a lot of risk. So usually in times like these, the companies who might be penny stocks are the first to fold. And I would not recommend that being the strong part of anybody's investment portfolio. That would be the most risky part. And people who invest in penny stocks need to be emotionally prepared to part with that money because there's a very high risk place to invest.
Wow. Okay. So what do you say to the folks who, I can tell you, I was talking to my mom the other day, who is nearing retirement, and she said that she's taken a hit in her 401k. Yeah. So what do I say to her?
Well, it just depends on her particular situation and accounts. It's all about how much you need to live on, how lean you can be in bad times if you don't have a backup plan. A lot of people just don't have the opportunity to build. And their one retirement account and Social Security is all they have, and that can be a very tough place to be when times like these occur. Mm-hmm. So if somebody's in that situation, they need to try to withdraw as little as they can from the only investment account that they have, and then when the times get better, they look to build out parts of their financial plan to be prepared for situations like these in the future.
Okay. The next question is, what are some near-term opportunities that you are seeing in the midst of this pandemic? Because some folks are winning in this pandemic. So do you have any thoughts or advice on that?
Yes. I mean, if somebody has money that is not part of their emergency reserve savings and is not part of their retirement, and they are willing to invest it, technically speaking, it could be a good time to invest because the markets are still down 15 to 20% from where they were at highs earlier this year. Mm-hmm. Going back to what I said earlier, you want to buy low and sell high. So technically stocks are on sale. That being said, there's still a lot of uncertainty as to, is the market going to perpetuate kind of up and down in little instances here and there like it is now, or are we going to see kind of chapter 2 of a drop? None of us have a crystal ball. So for people who do invest now, because they do want to take advantage of the discount, they need to be prepared to let that money stay there for 3 to 5 years and have a long-term tolerance to ride out the storm and then recoup the gains on the other end. Okay.
So some stocks that I guess we could say are probably doing well right now. I can say that I own a Peloton bike. I'm a big fan of Peloton. And so they're riding high right now. Do you think it would be a good time to invest in Netflix? Netflix is doing really good right now. Obviously, everyone is stuck home and has watched about every show on Netflix. Yeah. And Peloton, would you say it's a good time for those folks?
It could potentially very well be. People who want to invest in individual stocks, need to be masters of their craft because it's their money that they're dealing with. Warren Buffett has always encouraged people to invest in companies that they patronize and believe in. And when they do invest in these companies, to consider themselves an owner of the company and continue to believe in that company if the fundamentals are there, and not jump ship in bad times like this, and you will be a success financially. So I would tell people to do the research. a lot of the investment experts that I lean on design investment portfolios that are well diversified and implement strategies involving a lot of different companies. So if one company goes down, all the other companies in the portfolio are there to help prop up the returns over time and kind of mitigate the volatility.
Well, let's talk about that. Since you brought up Warren Buffett, I want to say I was reading an article just last week, and I think he sold all of his stocks in airlines. Does that sound familiar to you?
I think I have seen him in the headlines that he sold some stocks, but he is very famous for telling people that in times like these, Berkshire Hathaway, the company that he owns, is going to be out in the rainstorms with buckets trying to pick up all these different companies and invest in them because now is the time to buy. Okay. So he may have done some investment management. He is the leader in the investment world. He's a very wise person. So I'm sure he would tell people the same. Like this is a time for opportunity. It is not a time to run for the hills. So
with him selling the stock, is he saying I don't believe in Delta anymore? Is that what
I don't know what he's telling or what he's saying. I haven't looked into it that much.
Okay. Someone said a cannabis company devalued their stock on Monday at a 12-to-1 share deficit. Are you seeing that kind of across the board?
In cannabis companies?
Cannabis companies.
I have the privilege of help, working directly with clients and helping build their financial plans around cash flow, debt management, estate planning, investments, insurance, and helping them implement these plans. So I do not have the luxury of researching sectors and different stocks and companies day to day. I lean on my investment managers to do that. So the cannabis companies, it is a very high risk because it's an emerging market type of product, and many of these companies, when hard times occur, fold, and that's how the other ones kind of gobble them up and grow. Yeah. So investing in that sector, we would need to come with a lot of research.
Okay. All right. So what are some of the signs it is time to buy?
Well, one, when you are yourself ready to buy, going back to step one is have 3 to 6 months worth of living expenses in the bank in case of a rainy day like we're seeing right now. Step two, make sure you have health insurance. And step three, then you're ready to invest. Most of people execute step three, being ready to invest, because they're contributing to their retirement plans. In the marketplace, being ready to, a good time to buy, emotionally it does not feel like it right now, but technically right now is a good time to buy because the markets have crashed. I mean, think about it for yourself. You want to buy when the market's doing well or when the market's doing bad? Technically, you want to buy when the market's doing bad because that means you're going to get everything 15 to 20% off. You just have to be patient for that, the market and all these different companies you're investing in to recover. It's, very, very difficult to see a quick turnaround on your investment.
So you may or may not be able to answer the next question, but what sectors of the markets are you rotating investments to and from?
I do not rotate investments. I work, again, with many different investment managers that have many different portfolios and help clients find the right manager to invest with. These days, especially over the last 10 years, domestic stocks have done very well. The United States likes to compete and competes very fiercely in the business world. And, the S&P 500 is a great benchmark to demonstrate that. Index funds can be a good place to invest, and in retirement plans, target date funds can be a good place to invest because they help change the investment over time as your risk tolerance changes. But sector investing, I mean, technology is probably has been and will be the leader in that area right now. We've seen a lot of downside on the oil and gas energy sector with what Russia and Saudi Arabia have done. So again, I feel much better with clients using well-diversified portfolios because they're not investment experts tracking stocks every day. I like to think that I know enough to be dangerous, but I lean on my investment managers who are doing all the research to design the portfolios.
Gotcha. Okay. And so we are at our last question, Dane. What is your firm doing in the current market with client portfolios to save as much as possible?
Yeah. It's really reaching out to our clients, helping them understand what's going on in their in the economy, how that reflects in their investment accounts, reviewing their different positions in regular cash savings, their retirement savings, their non-retirement investment savings, and helping them remember what their goals were for each of these accounts. Okay. And why they may need to sit tight in some of these accounts, or maybe there are room for adjustments in other ones if they need to get to the money soon. So it's really been open communication just to help people remember what they did and why they did it in the first place. And for others who are understanding what holes exist in their financial plan today and what they need to do to fill those holes. So if this happens again, they'll be much better prepared.
So Dane, what do you say to folks? Because I'm sure you got more than just my email, but several emails of people who are panicking. What would you say would be the number of folks that said, listen, I gotta get this money now? And so what did you share with them to kind of alleviate some of that stress and concern for them?
There are plenty of graphs online. If you do a Google search of seeing either the Dow Jones or the history of the S&P 500, which are big stock market indexes, basically reference points or benchmarks, and you can see the growth over the last 50 years. And it goes up and it goes this way. It goes up and it goes up and then it goes down and then it goes up and it goes up and then it goes down and it keeps going up higher and higher with some downturns, and just help them remember that the market through its about 100-year existence, has plenty of crashes, but it's always recovered. There are two things that are certain: the market's going to have a crash and then it's going to have a recovery. And so just helping people remember there will be a recovery. They just have to be patient.
Okay. The people on Instagram said they couldn't see me. My apologies, guys. I'm sorry. But you will be able to see the video on Facebook afterwards. It will be available. So I apologize for that. But Dane, I want to say thank you so much for your time today and answering our questions. I appreciate everybody on Facebook and Instagram for sending in additional questions. We really appreciate you guys joining us. This recording will be available afterwards. Thank you so much, Jim. Go to Dane. Please tell the folks, how can they contact you if they are looking for a financial planner? And I can say Dane has been with me for 8 years, answering all of my emails and phone calls, and I appreciate him, and I think that he's a great person to work with. I really do.
Thank you very much.
Share your information with the people, Dane.
Yeah, I like to think that I'm a pretty easy person to get a hold of, so I can be reached by email at dcooper@capstonefn.com, and that's franknancy.com. My office number is 404-926-1325. So please call or email me. I'd be happy to get better introduced, explain how I help clients, and learn about their situations and what we can do to work together to help find solutions.
Awesome. Thank you so much, Dane. And you guys know me, Attorney Judith Luce Montgomery of Atlanta Family and Immigration Law. Nous parlons Creole and habla Espanol. You can reach us at 678-601-5580. Thank you so much, Dane. And thank you everyone who joined. And I will see you guys back here next Tuesday, 7 p.m. Have a good one, everyone.
Thank you.
Thank you.